Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 2nd. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I'm layering on top of it option strategies I find on any given day based on that economic, geopolitical market analysis. We come up with an assumption and then I implement my option strategies around those assumptions. But I do it through some guidelines that I've come up with through my 25 years of experience. We don't just go out and sell calls or buy puts on any willy-nilly directional assumption. What we need to do is look at that environment around the underlying and then find the right strategy for that underlying and our market assumption. I do that in more detail in the in my webinars, my weekly webinars, but then I kind of breeze over some of the nuances here in the daily market commentaries because I just don't have the time to drill down on each and every option strategy every time I put one on. So check out protraderstrategies.com and find out the real nuts and bolts of putting on any given option strategy for your market assumption. And across the pond, not really a whole lot there, but here in the United States, it is a holiday week. Yesterday, I forgot to mention it was Canada Day. Well, tomorrow we're observing the 4th of July, and so we aren't going to be open. Therefore, they've moved data ahead to today. Well, that being the first Friday of the month, we usually get the non-farm payrolls, which is our most important economic data point, really, especially right now. And they moved it to today. We'll get to that in just a moment. But first, we got the hourly average earnings coming in at negative 1.2%, expected it to be negative 0.8%. So a little bit worse than expected there. Probably because there's so many people unemployed that there's not a whole lot of wage inflation. You know, if somebody is looking for a job, they're willing to take a little bit less money. That's really where that's showing up there. We also got the non-farm employment change coming in much better than expected. As a matter of fact, I think it's a record number coming in at 4,800,000, expected to be 3 million-ish. But they also revised last month's number up by another 300,000, so that really makes this number look good. Last month was actually a record, and now this month just completely blowing that record out of the water. The unemployment rate dropped from 12.4% to 11.1%, actually dropped from 13.3% to 11.1%. It was expected to be 12.4%. Claims did increase to 1,427,000. It was expected to be 1,350,000. So more jobless claims happening. A lot of that has to do with the people weren't able to make it to the unemployment claims lines as they were very long and probably had some people discouraged and not just wanting to do it. We also came out with the factory orders. Factory orders came in at 8%, expected to be 8.6%, so a little bit lower than expected there. We also got natural gas storages, 65 billion cubic feet, which was expected to be 70 billion cubic feet, so a little bit lower on that aspect there. All right, so without that further being said, let's get on to crude oil. Remember, we had a bigger than expected drawdown in crude oil yesterday. We are moving back up into that 40 handle. Part of that has to do with heading into a holiday weekend, and a lot of people are expected to travel, despite the fact that everybody's trying to say stay at home. I don't know if everybody is. I think people are probably going to do some type of traveling. I'm guessing it's more to secluded areas and maybe go camping and things of that nature. So that would be people driving. I don't think people are jumping on an airplane to fly anywhere anyway. So we've got crude oil moving higher back into that 40 handle. Gold moving a little bit higher, despite the fact that we're seeing some strength here in the equities today. But gold up about $7. Bonds up a few ticks here on the day. Earlier this morning, we were a lot lower, not quite a lot, but coming and testing that area that I've talked about as support came down a little bit close to that. Now we're starting to see a bit of a rebound. I think people are starting to realize the Fed isn't going anywhere, and so we're going to have to kind of get stuck here. Now the VIX is coming off, but it came down and touched that 200-day moving average. Not that it really holds a whole lot of weight when we're talking about the VIX, but it is interesting to keep an eye on because it does have a tendency to cause some support and resistance there, and we did see a bounce off that quite a bit there, back into the 20s the last couple of days. And that's because we've seen some strength in the equities, as we can see here with the Dow Jones Industrial Average up 300 points on the day. A little bit off the highs, but still some strength in the markets today. And then we've got the NASDAQ really blasting it off and making new all-time highs. Again, 10,000 is a new handle that we're going to be getting used to here with the NASDAQ. It's up 120 points, mostly led by the tech sector, obviously, as the NASDAQ is very tech-centric, and we have companies like Amazon and Tesla blowing the tops off of their markets. And we'll talk about Tesla here in a minute as I put on a trade with Tesla. And the E-mini S&P is up 33 points on the day. We look at the daily chart. On the economic data, you can see market really blasted off. Probably a little bit of overnight covering. The longs really probably thinking, okay, we need to cover some of our position. And as the day goes on, again, it's going to act like a Friday in the summer markets. We're going to see these volumes really start to dwindle here. So the big money will probably stop pushing this market around, and we'll see that volume kind of fall off. Now, what it's going to do to the overall markets, we're going to have to see, because going into the weekends, it seems that people do not want to hold on to stocks because of what news might come out around this pandemic. So I would expect to see weakness heading into the late afternoon. So we'll have to keep our eyes on that. But without further ado, let's talk about some of my trades. Now, with that being said, I did see this trade as a technical kind of blow off the top here, all right? I think the shorts just kind of puked out. Yes, they did come out with some interesting tidbits today that they are really pushing that Model 3, and it is doing very well. Are they going to be able to get the rest of the 300,000 delivered by the end of the year? That is their goal, and I don't know that that's really going to happen. But all of that being said, I'm just looking at this trade as a technical type of trade, and we usually call this a time to sell, at least on the floor, when we would see a market really blow off on the top here. I think the shorts puked out. I think that the market is ready to probably try and cover this gap here. That being said, pretty low implied volatility if we're talking about from this section here. You can see that we are relatively low on the marker. I probably should have drawn that a little bit higher. So you can see we are a little bit lower. Yes, it looks like it could go down and touch that line I just drew, but we also have to keep in mind that we have an earnings coming up right at the beginning of next month. So I do expect us to start seeing some of this volatility start to creep back up. Now, all of that being said, I have a bearish assumption in here because I talked about, I think we're going to cover this gap here. We have low volatility. It's kind of like this roadmap to creating an option strategy or implementing an option strategy, which we're doing right now. This course is we look at a stock or an underlying. We come up with that assumption. We start digging into the devil of the details, which is like volatility. And now I think that I want to exploit volatility. I don't think it's necessarily going to continue to come out. Well, in that case, I want to buy low volatility, right? And if I want to buy low volatility, that's leaning towards buying an option strategy. And if I'm leaning towards buying that option strategy, then I want to limit the thief in the night that comes and steals my premium, which is theta. Well, so what does that all lead us to believe? I'm going to be buying an option contract, a put, because a put is directionally biased, And I want long duration to limit that theta decay. I want to also, be able to take advantage of volatility increasing around that earnings. Now, am I going to hold this trade through earnings? No. But heading into that earnings, I do think that there's going to be some profit taking coming out, which means that's going to be a little bit more of downward pressure in this market. Volatility will increase, and I want to capture all of those things. So I decided to go in there and buy a put in Tesla. I didn't want to put a lot of money on this, but I did want to add some negative deltas to my portfolio. The market is a little bit frothy, I think, for the environment that we're really seeing. So I decided to go in there and take Tesla in the September, bought the 1,000 puts in there for $64.45. Now, I am going to have a very itchy trigger finger on this trade. Anything that trades above this high here, I'm going to be out of my trade. Okay, that is my out above 122.28. Any trade there above, not today, but next week, if we trade above that mark, or I am out of this trade. I do think we're going to start to see a little bit of the longs start to cover, as we've seen now the shorts puke out or dump their positions. That's caused that market to spike. Yes, they did have some good news, but this is just getting a little bit overdone. I mean, we talked about this yesterday, that they're a bigger company than in market cap than Toyota. So that to me is a bit of a red flag going on, that I think it's not really sustainable, especially for a smaller automaker. I mean, they're not pumping out the cars that Toyota or even the rest of the big manufacturers are. So I'm playing this a little bit to the downside. Like I said, it is a itchy trigger finger to get out of this, and I will be out if we start trading above that. But a market coming down a little bit, I will hold on to this. Not probably all the way down to 1,000, which is right, in and around there. I'm not looking for that type of cover. I'm kind of looking for it to cover that gap. I'll be happy to get out if we start trading around, in and around 1,100 is probably my out on that. I'm not necessarily looking for it to go down there and hit my strike price, my strike there. So that's my Tesla trade, September 1,000 puts. And then in the SPY, again, I just wanted to add a little bit of protection to my portfolios with some short deltas in here. We've got relatively low implied volatility, and I'm again looking at it from before, or I'm kind of taking this out of the equation, right? Because we're kind of in a new paradigm right now, and I think the volatility is going to hang out for a little bit. And so therefore, I'm kind of looking at where we're at right now, which means implied volatility is very low. We saw the VIX come down and test that 200-day moving average and kind of bounced away from that. That could be a signal that we're going to start seeing volatility rise. That will then help a buying volatility type scenario, right? I also want to limit theta decay. We've got low volatility. I expect it to rally or move higher. Therefore, I went in to buy, and I have a bearish assumption. So I'm buying again puts, right? So I went into the September and bought the 300 puts in there for $9.99. I did all of these trades very small. I just wanted to get some exposure to the downside. I'm not trying to completely go negative delta in my portfolio, but I did want to add some negative deltas, which with these two trades basically makes me delta neutral in my portfolio, which is kind of where I want to be right now at this top. I don't want to limit my upside necessarily, but I want to also protect myself to the downside. And I do, and you've heard me talk about this, expect us to kind of start trading in and around a range and not get massive blow off the tops or just a complete vertical move like we've seen in the past. I think we're going to start trending a little bit more sideways here. So all of those things being equal, I kind of want my portfolio to be a little bit more neutral, right? If it's trying to follow my theory of my market analysis, well, that's how I'm going to play it, and that's what I've done in my portfolio to kind of neutralize it a little bit more. All right, that's all I've got, other than we do need to talk about one more thing, and that is our disclaimer. Please take a moment to go over this. I hope everybody has a great holiday weekend. Hold on to all your fingers. Don't blow those off. I know we're not even allowed to have fireworks down here in Arizona right now. The fire danger is at extreme levels. As a matter of fact, they're telling they have signs everywhere for like the boaters that, yes, we do have lakes here, that don't drag your chains because that can literally set off a forest fire or a brush fire. So crazy down here with the heat and the lack of moisture. So, make sure you stay safe this weekend. Come back next week without Corona. Let's flatten that curve. And that's about all I got for you guys. Other than if you can't take that, take it easy.